Imagine waking up 5 years from now, rolling over, grabbing your phone, and seeing your account balance flashed a jaw-dropping $100,000. That's not a fantasy. That's the power of a simple plan, smart habits, and a dash of discipline. In this video, I'm going to show you exactly how to turn your paycheck into a six-figure portfolio, even if you're starting from zero. So get cozy, smash that like button if financial freedom sounds better than living paycheck to paycheck, and hit subscribe so you never miss another video that could change your life. Oh, and drop a comment right now telling me your biggest money goal. I want to see who's dreaming big today. 5. The blueprint. Laying down the exact numbers. Picture yourself sitting in your small apartment, maybe with the soft hum of the fridge in the background, staring at your laptop screen late into the night. You type in that big dream, $100,000. That's the number you want to see blinking back at you in your investment account 5 years from today. But how do you turn that dream into something you can actually touch? Start with the cold math. If you're beginning with exactly $0 and you're aiming for an average annual return of around 7%, roughly what the broad stock market has delivered over decades after inflation, then you'll need to invest close to $1,400 every month. That's about $325 every week. That means making serious shifts in how you live right now. Fewer spontaneous online shopping sprees. Maybe cooking at home more often. Maybe saying no to that tempting luxury gadget. But if you already have a bit of a head start, say $20,000 saved, your monthly requirement falls sharply to about $900. And if you're starting with $50,000 already invested, then your monthly investment drops even more dramatically to around $400. Every extra dollar you already have in the game becomes like a tiny soldier, working around the clock, building your empire even while you're sleeping. That's the magic of compound growth. It quietly turns what seems impossible into inevitable. So do the math. Figure out your exact monthly goal. Let it burn into your mind. This isn't about vague wishing. This is about building a financial roadmap with signposts and mile markers that show exactly where you're going and how you'll get there. 4. Automate to protect yourself from yourself. Most people say they'll invest what's left over at the end of the month. The problem is, life always finds a way to spend it first. Unexpected dinners out, random car repairs, that tempting flash sale on the newest phone. Before you know it, your future is robbed by your present. So reverse it. Make investing your first bill, not your last. Decide on that target monthly investment and set it to move automatically the very day your paycheck hits your account. If your plan calls for $1,400 a month, set up an automatic transfer for $700 every 2 weeks if you're paid bi-weekly. Imagine sitting on your couch on a lazy Sunday afternoon, not thinking about money at all. Meanwhile, your brokerage account has just purchased more shares for you, pushing you quietly closer to that $100,000 mark. This is how wealthy people do it, not by bursts of discipline, but by setting up systems that don't rely on discipline at all. Want to get even smarter? Set your automatic contributions to rise by 5% every year. As your income grows, your investing grows with it, without you even noticing the extra pinch. Because here's the uncomfortable truth. Discipline fails under stress. Automated systems don't. When you build your investing on autopilot, you protect yourself from your worst impulses. Whether you're exhausted, distracted, or panicked by scary news, the machine keeps running. 3. Go all in on the right engine. Stocks are your fast lane. Building a $100,000 portfolio in 5 years means you can't play it overly safe. Keeping your money in a savings account is the equivalent of parking your car in the driveway, hoping it somehow drives itself to a new city. Inflation will nibble away at it every single day. So you need growth, and that means stocks. Historically, broad stock markets have returned about 7 to 10% a year after inflation. That's not every year, but averaged out over long stretches. Over nearly every rolling 5-year period since World War II, the market has ended up higher about 90% of the time. Buying into a broad index fund or ETF, like one tracking the S&P 500, means you own little slices of hundreds of companies, Each day, millions of workers across thousands of businesses are hustling to create better products, cut costs, land new customers. And every drop of that global hustle trickles into your portfolio. Imagine your future self 5 years from now, looking back at all the recessions and scary headlines you lived through. The market might have plunged 20 or 30% one year. That's terrifying. But to the disciplined investor, it's actually a golden buying opportunity. Every dollar you put in during those downturns is like buying future growth on a clearance rack. Those are the moments that turbocharge long-term gains. So keep it simple. Go heavy on stocks. Avoid the temptation to dance in and out of the market or chase hot tips. Let broad market index funds like DOO or total market funds like DTI do the heavy lifting. They're boring, but boring is beautiful when your goal is to steadily stack up to $100,000. 2. Grow your income, the hidden accelerator most ignore. Here's where most people get stuck. They obsess over cutting small expenses, skipping the morning latte, dropping the premium music app. That's helpful. But there's a limit to how much you can cut. You still need to live. But your income? That has no ceiling. Picture adding a simple side hustle that nets you $500 a month. Maybe it's tutoring kids on weekends, driving for a rideshare company a few nights a week, or building websites in your spare time. That extra $500, invested every single month, becomes about $35,000 after 5 years with average growth. That's over a third of your goal purely from side income. Or imagine negotiating a modest raise at your main job. Say you get $5,000 more per year. If you funnel every penny of that raise straight into your investments, that becomes roughly $25,000 more after 5 years. It's the kind of quiet financial power that compounds behind the scenes, all from one brave conversation with your boss. So while you're automating your investments and trusting the stock market's long-term climb, keep aggressively hunting ways to expand your income. The more you earn, the more you can throw fuel onto your investment fire. It's the difference between creeping toward $100,000 and racing there. 1. Master your emotions, because the biggest risk is always you. Now we come to the hardest and most important truth of all. Hitting a $100,000 portfolio in 5 years isn't mostly about spreadsheets or clever stock picks. It's about psychology. It's about learning to outlast your own panic and greed. Picture this. You're 2 years into your plan. Your portfolio has grown to $50,000. Then a sudden recession hits. The market drops 30%. Overnight, you open your account, and it's down to $35,000. That gut punch is real. Everything in you screams to sell, to get out before it goes even lower, to somehow protect what's left. But that is exactly how most people fail. They lock in losses and never get to ride the rebound. Historically, markets have always recovered. Selling in a panic is like jumping off a roller coaster halfway through the loop. Or flip the scenario. Your portfolio soars, markets go on a tear, and friends start bragging about risky meme stocks or crypto coins that quadrupled in weeks. Suddenly, your disciplined index funds look slow and boring. You're tempted to gamble, to chase quick riches. And just like that, greed becomes your downfall. The most successful investors aren't the ones who can predict markets. They're the ones who can master themselves. They automate so they're forced to keep buying even during downturns. They zoom out, looking not at daily squiggles, but at decades of market growth that prove patience is the real superpower. So stand at the 5-year mark in your imagination. See yourself logging in and watching your portfolio finally tick past $100,000. That moment isn't just about the money. It's about knowing you stayed calm when others panicked, that you trusted your plan through storms and sunshine alike. That's the real wealth, the mindset that will keep you building not just to $100,000, but to $500,000 and beyond. This is how you build a $100,000 portfolio in 5 years. You start by brutally honest math that reveals your monthly target. You automate contributions so your emotions never get a chance to sabotage your plan. You bet heavily on stocks because history shows they're your best path to serious growth. You relentlessly hunt ways to earn more money, using every extra dollar as rocket fuel for your investments. And above all, you learn to master yourself. staying steady through panic and humble through boom times. Can you feel it? That future version of you, stress-free, smiling, with $100,000 stacked up, knowing you played the long game and won. That can absolutely be your story. If this lit a fire under you, go ahead and pound that like button and subscribe so we can keep building your wealth together, step by step. And hey, jump into the comments and tell me, what's the first thing you'd do if you had a $100,000 portfolio? Travel? Start a business? Just sleep better at night? I can't wait to hear. Thanks for hanging out. I'll see you in the next one, where we turn your dreams into numbers in your account.